You guys have to see what Dan Ives just said about Tesla stock and a massive run that will occur in the second half of this year.
Joining us now is the aforementioned Dan Ives, managing director, of course, at Wedbush. What do you mean the recovery story has begun?
The comeback story for
Did it
Tesla.
need a comeback?
I think it did, because they had massive headwinds in China, and now we're seeing the comeback play out. Now, 2Q deliveries next week, I think that's really going to be the last of really some of the worst that we've seen in China. We're starting to see a mini recovery in China. The comeback kid story for Musk is starting with, of course, Robotaxi Day in August. I believe this is a stock that's going to have a massive run second half of the year.
What do you think has been, then, that headwind that you talked about? Is there one thing you could point to?
Look, EV demand's clearly been soft globally, but it's really about China. I mean, China was a massive tailwind for years, became a headwind, but now, Brian, you're not seeing those price cuts anymore. So you're starting to see stabilization, China demand starting to increase. And I think the stock's telling you, and we believe next week's just another sign of it, is that the worst is in the rearview mirror for Musk and Tesla.
I want to go back and hope you don't mind. You're a good guy and you roll with things. You heard the top of the show, okay? And I'd built these Trump and Biden portfolios, and I had, in my original one, I had Tesla, because I thought we decided, we're not really sure. With Tesla, if Trump wins and rolls back some of these EV financial incentives, don't know if he will, but let's say he did, would Tesla have a natural advantage over its customers because of its price point? In other words, are they kind of, dare I say, a Trumpy portfolio type company?
Oh, I'd say, Trump pro-Musk, and I'd say it's bullish. A Trump presidency would, at the end of the day, be bullish for Tesla, negative for EVs. Then we saw that when you showed that across Rivian and others. And I think it also speaks to the Biden administration. Musk has really been an afterthought. In a Trump administration,
well, he's been actively ignored.
Actively.
President Biden, I think 2 weeks ago, tweeting out something like, "We're going to make EVs in America," and like he got ratioed, and people are like, Tesla,
and I
already does.
And I think if Trump's in the White House, Musk gets more front and center. That's bullish for Tesla, especially if you start to see those EV rebates roll back. Negative for the industry, bullish for Tesla.
But that's the point. If somebody decides to buy an EV Silverado from GM, in part because they get $7,500, right? If that goes away, they might say, I just can't pay for that. I'm going to go with a Model X.
And they've already scaled. If you look at their scale and you look at their pricing, they are in a massive position of strength. And that's why I think as you start seeing more signs of Trump presidency, that is bullish for Tesla.
So I think that was a great clip from Dan Ives on CNBC. The one thing that I was, hoping that they mentioned in regards to the politics of Biden or Trump, I like to stay apolitical here on this channel. I think no matter what, stocks tend to do well under Democratic or Republican president. It really doesn't matter too much. But one thing that I thought Dan Ives should have mentioned, and give him a little bit more time, he probably would have. If you get a Trump presidency, which is the most likely scenario at this point, according to the polls, and your betting odds have Trump winning by about 60% odds, you are going to get a lot more rate cuts under a Trump presidency than a Biden presidency. Clearly. Now, Trump also pays very close attention to the stock market, to some degree judges his presidency based on markets, and that can overall be a huge positive for Tesla. As rates start to come down, that will help margins increase because Tesla will not have to spend as much money buying down interest rates like they're doing currently on the Model Y as well as the Model 3. It should really help demand pick up, and I guess the question then is, what does inflation do? I think at that point, inflation will probably be defeated anyways by the beginning or mid 2025. So more cuts will be a positive for Tesla. Now, cuts as far as interest rate cuts from a demand perspective are positive, but also for long duration growth stocks. Tesla is a long duration growth stock. Tesla is a 10, 20-year growth stock that will do very well during that period of time. Again, I'm not a financial advisor. That's just my opinion. I'm sure that's your opinion as well. But when rates are this high and you can get 5% for nothing, risk-free, it makes it a lot harder to go out and buy a 10, 20-year growth stock like a Tesla. Because guaranteed, if you sit in cash over 10 years, at this point, you're going to get 50% return on your money. Risk-free. So you really have to have a compelling story to get people to buy into long-duration growth stocks when rates are this high. But when rates start to come down, you're going to see a lot of money start flowing into Tesla. And that's going to be a huge positive for Tesla stock and overall Tesla's business. Now, Gary Black just wrote on X, he says, Tesla, with sentiment so poor for next Tuesday's Q2 deliveries, Wall Street consensus around 440,000, that's negative 6% year over year. But the whisper number, the most recent consensus, closer to 420,000, that would be negative 10% year over year. There's a decent chance of an upside surprise on Tuesday, especially if we get another 17.5 thousand weekly registrations out of China. Also, with the last 2 days of the quarter being over the weekend, there's more opportunity to pull in deliveries. And we have seen this last minute push over in China to especially get cars delivered to customers. And I'm pretty optimistic that the IR compiled estimates for Tesla's deliveries are going to come in closer to about 410, 415, maybe 420,000. And Tesla should be able to beat those easily. Now, there's two different things to really know here. You have the year over year numbers, which are going to be negative, minus any kind of big surprise from the US. We don't get a lot of data from the US. To be positive on a year-over-year basis, you're going to have to come in over 467,000 vehicles. But again, when estimates are negative 10, negative 6, 7, 8%, you could actually get an upside surprise there, maybe come in at negative 5% year-over-year. That would be a big surprise for Tesla stock. But I do think your quarter-over-quarter numbers are going to look really good because last quarter you had 386,000 deliveries. If you come in at 430, 440,000, that's going to be some really strong quarter over quarter growth. Now, what does Wall Street pay more attention to, the quarter over quarter number or the year over year number? I think that's hard to say. It's kind of like inflation. What matters most? Well, month over month matters most, but people also pay attention to year over year. So it wouldn't surprise me if you actually get more people paying attention to the quarter over quarter growth that could be 10, 20, 20%, 10, 15, 20%. And that could also be seen as a big positive for Tesla stock. Now, I think we are at a very interesting inflection point in our markets because if you take a look at the data that we had on Friday, and we'll look at that here in just a second, you had big tech stocks sell off big time. You had Apple selling off 1.63%, and a lot of the selling happened in the last 30 minutes of trading or so. You had Nvidia down 0.36%. A lot of that happened in the last 30 minutes or so of trading. Google was down 1.84%. Again, a lot of that happened in the last 30 minutes. Same for Amazon, and same for really all of your big tech stocks. Now, why this is important is because on Friday was the last day of Q2. So what hedge funds and institutions were doing is locking in profits and repositioning into other areas. Take notice, Tesla was actually green, up 0.23%, following a couple of days worth of a rally. And let's be honest, Tesla's rallied from $138.80 per share up to this recent high that you hit on Friday of $203. That's a decent bottom to top move on a percentage basis. That is about a 46% rally from the lows to where you just hit the highs on Friday. You did not see profit taking in Tesla. In fact, it looks like hedge funds and institutions positioned into Tesla. And you can see the last 30 minutes or so of trading for Tesla. Tesla stock actually went up over $3 per share, which is a great sign for what could be to come in the next quarter. Because, again, if they're positioning into Tesla for Q3, that probably means more money is going to position into Tesla. It probably means Tesla stock is going to do well. Now, as I shared in the last video, you did see the overall selling in tech. The Nasdaq was down 0.71%, S&P down 0.41%, and the Dow was down 0.12%. You also did have the Russell 2000 that was up about 0.5%. And if you take a look at the percent of stocks trading above their 50-day moving average, you actually did see a broadening out of our markets on Friday. Even though the Nasdaq was down almost 1%, the S&P was down almost 0.5%, you actually had 2.59% of all stocks breaking above their 50-day moving average. That was a sign of a rotation, number one, but a stronger market than not. A market that was doomed for failure. You wouldn't have seen the average stock rise. And really the biggest question from here is, do we get a correction or do we get a crash? Now, it's almost a statistical guarantee that we will get a correction between now and the election itself. That would be a 10% pullback. On average, you get about a 13% pullback during election years. But we could see a 30+% crash if it looks like we're going into a recession. We'll talk about that a little bit more in the next video. I do think at this point, one of two things happens in our markets, and specifically with Tesla. Number one is you get a correction. You get some selling in big tech. Things kind of come in line with estimates or underwhelm a little bit for earnings. Expectations are sky high. It's going to be hard to even meet expectations. And you probably get a correction, broad-based, but you could also see the internals of the markets start to do much better, like what we seen on Friday. You could actually see a correction where big tech falls because expectations are too high and those stocks are too high, and the rest of the markets actually rip higher. That's the potential outcome. So basically, a broadening out of our markets is scenario number one. Scenario number two is an outright just full-on crash if the economy does weaken too much. And that's why we want to watch the economic data and be prepared to be nimble. All it's going to take is a really low or negative non-farm payrolls report, and markets are going to freak out. That would probably lead to a 15 to 20% crash from here. Just one really bad non-farm payrolls report. Because, again, what tends to happen is when you get a bad one, you tend to get a series of bad ones, and the labor market can weaken quickly when that ultimately happens. Now, we'll talk about this more in the next video, but I think either way you put it, by the end of this year, especially after the election, especially if T-Man wins, you're going to start pricing in a lot more cuts. You're going to start pricing in a better interest rate environment for Tesla, and you can start to value Tesla's longer-term growth prospects like Optimus and Robotaxi a lot higher. And that will have a positive impact on Tesla stock. So Dan Ives believes Tesla is going to see a massive rally here in the second half of this year. And that's possible. That really is possible, especially after the election. The last 2 months of this year could be very strong. But I actually think 2025 is going to be way stronger. And I think 2025 is when I'm expecting Tesla can hit new all-time highs. And I don't think it has to be like too far into 2025. I think the second quarter of 2025, you could hit that all-time high level, especially depending on what happens with Robotaxi Day on August 8th. That could definitely cause a re-rating in Tesla, and Wall Street to start paying a little bit more attention to Tesla's real-world AI deployments like Robotaxi and Optimus. So I am very encouraged with what we have seen recently for Tesla. I do think July 2nd, Tesla's going to come out with a delivery number closer to about 440,000 deliveries. As high as 450 wouldn't surprise me. As low as 420 wouldn't surprise me. And I think either on the low side or the high side, it's still going to be seen as positive. Again, because that month-over-month growth rate is going to look really good. And again, you see what Tesla's putting up, the kind of numbers Tesla's putting up in an environment that is not favorable for autos, right? Not at all, with rates the way they are, the highest rates in Tesla's business history. And Tesla's still putting up these numbers. Just imagine when rates start to fall. I think it's only a matter of time before Tesla really starts to get its shine back and starts to become a market leader again and ultimately break above that $1 trillion market cap and go on its way to 2, 3, 4, 5 trillion. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Stay tuned to the channel for the next video. We will be going over all kinds of different things that I think you need to know as well heading into the second half of this year. That video comes out at 8 p.m. Eastern Standard Time. Most importantly, though, enjoy your weekends, and I will see you in the next one.